Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today we'll be talking about the events that transpired in the markets yesterday, with a key focus on the US non-farm payrolls. There was a huge shockwave in the numbers that we witnessed compared to the market expectations. And in this session, we'll be trying to understand what the strong jobs print means for the US markets. And by the US markets, I mean the US dollar currency pairs, US equity indices, as well as gold and silver prices. So once you join in, kindly say hi to everyone on the comment section. And also remember that this session does not constitute any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So we'll be starting with the economic calendar, try to understand what are the prevailing events for the day, and also dive deeper into what happened yesterday. Just give me a sec. All right. So as you can see, today being Thursday, the 12th of February, this means that we are 2 days through to the Valentine's Day. Happy Valentine's Day in advance to you all, guys. So this morning we had data coming in from the UK economy, where the GDP data month over month came in as expected with 0.1% growth. It's a slight slowdown from the prior reading, which was 0.2%, and this was revised data down from 0.3%. Then preliminary GDP quarter over quarter came in at 0.1%, missing expectations of 0.2%. Then the rest of the data was negative, ranging from construction output, goods trade balance, index of services quarter over quarter, industrial production data, manufacturing production, as well as preliminary business investment. So this showed weakness in the UK economy. We'll be looking at how the market has reacted to that, especially in comparison with the dollar, which was very strong at the market open, but now seems to be weakening, and other currencies are taking advantage. So fast forward for the day, we'll be looking at the unemployment claims. This is a weekly report from the US economy, showing the number of people who are signing up for unemployment insurance for the first time. So the expectation for the day will be 222K, which will be a slowdown from the prior reading of 231K. So remember, this is one more data point on top of the US non-farm payrolls for January, which were delayed, mainly because the US government was in a shutdown, but then later released yesterday. So what transpired yesterday in the US non-farm payrolls? So on one side, the wage growth was up 0.4%, which beat expectation of 0.3%, and the prior month was revised lower from 0.3% down to 0.1%. So when you see average hourly earnings gaining, it means that wages are gaining, and this is good for the people. But then overall, in the long term, if wages are growing faster than expected, this can cause inflation, meaning that more people have more money in their pockets. So if you have more money in the economy chasing after the same goods, then as a result, you tend to see prices moving higher. So on the other hand, non-farm employment change came almost 100% higher, at 130K jobs created in the US economy in the month of January, which beat expectations of 66K and was higher than the prior reading in December, which was 50K, but then later on uh, downwardly revised to 48,000 jobs. So this boosted the confidence in the US economy, mainly because now there's more jobs being created. And at the same time, uh, gave the Fed some leeway to continue holding interest rates higher for longer, mainly because the weaknesses in the job market are beginning to take a U-turn. So in the prior meeting by the Fed, Jerome Powell had mentioned that inflation is not a very big concern since it's moving considerably towards the 2% target. But then the labor market was showing some red signs, and Powell was concerned that if labor market continues to weaken, then they might be forced to cut interest rates in order to boost markets. So now that we see that the labor market is a bit healthy, Powell might continue holding interest rates higher for a bit longer. So the chances or the likelihood of the Fed basically going on the next meeting and deciding to hold interest rates steady just increased yesterday as a result of the better than expected job market report. So also on the unemployment rate, we saw the number drop from 4.4% to 4.3%, beating expectations of 4.4%, meaning that unemployment rate is now reducing, which is a good thing for the US economy. And also for the Fed, it means that they are getting closer to their target of having full employment. So as a result, what we saw in the market reaction was on one side, we saw the SP 500, the Dow Jones, and the Nasdaq all spiking up at the announcement, whereas we saw gold and silver spiking down. So this lasted for about an hour, and then in the proceeding trading, we saw the opposite happening. So the Dow Jones, the Nasdaq, the SP 500 all went lower, breaking session lows, and gold also recovered as well as silver, showing that the market reaction at the instant was pretty bullish, but then it turned bearish very fast for US equities. But then metals, which have been on a very strong bull market run, also resumed their bullish momentum. So at the same time, we had the dollar reaction, which was pretty surprising. On one side, what we saw the dollar index doing is spiking higher. Then later on in the session, erasing all of those gains. But then towards midnight, proceeding to make some form of recovery. But now, as we end the Tokyo session, we are seeing the dollar index being weak. And with a weak dollar index, other currencies are taking advantage. So if you, for instance, look at the currency performance as of this morning, give you a view in just a minute. You'll notice that the dollar hasn't been particularly strong as of this morning, but then the biggest gainer has been the Japanese yen, which is up 0.23%. The New Zealand dollar, 0.1%. The pound, 0.13%, and the euro, 0.07%. Whereas the weakest currency has been the Australian dollar, which is down 0.07%. So if you check the same data for the entire week, the yen still remains king, up 2.78%. And if you look at the year-to-date performance, that is since the year started, then the yen has lost the mantle. It's the two Asian pairs that have taken the mantle, that is Australian dollar and New Zealand dollar, where the Australian dollar is up 6.69%, New Zealand dollar 5.3%, Swiss franc 2.89%, Japanese yen 2.57%. The pound is up 1.38%, euro 1.17%, Canadian dollar 1.05%, with the weakest currency so far in the year among the major currencies being the US dollar. So while the dollar has been making attempts at recovery, some of these currencies remain strong, especially the New Zealand dollar and the Japanese yen. And then also for the week, the yen still remains the king, especially after the big move that happened on Monday, following the win of the Japanese elections by the current Prime Minister, Sanae Takaichi. So other than that, we also have the stock market, which had a major movement yesterday. So following the non-farm payrolls, there was an overall, I would say, mixed picture, but mostly bullish, where a majority of stocks were on the green in the SP 500, with some of the key highlights including Micron, which was up 9.94% after launching a new product. But then, if you look at the financial sector, mostly in the red. You look at the tech sector, mostly in the green, with only exemptions being companies like Microsoft, Oracle, Palantir, and we also have XYZ or Block Incorporated, which was down 6.09%. This is Jack Dorsey's company, which basically renamed itself from Square to Block. So on the chip side, microchips were really doing well. You'll notice that most of the stocks were up 3 to 5%, with the key highlight being Micron, which was up by 9.94%. So with that being said, now if you look at Micron stock and how it has been doing, with since 30.09% gain since the year started. Of course, in after hours trading, there was more performance, being up 1.35%. So we expect more bullish momentum, and with year-to-date performance of 30%, and just yesterday, almost 10% gain, we should be expecting more activity from this stock, particularly today, given that companies that are involved in memory chips are making some good killing since the year started, with the big leader being SanDisk. So why did the stock make up such a huge jump at yesterday's session? So Micron stock saw as a HBM4 launch sparks global rally. So Micron's mass production of next generation HBM4 memory sends its shares in global semiconductor markets sharply higher, with analysts predicting continued tight supply and robust demand into 2026. So in a dramatic turn for the global semiconductor sector, Micron Technology, the largest chip maker in the US, has ignited a market rally with its announcement of mass production of commercial shipment of next generation HBM4 memory. So the news delivered on February 11, that is yesterday, set off a surge in Micron's stock price and sent ripples through exchanges from New York to Seoul, underscoring the outsized influence of semiconductor innovation on global markets. Micron stock soared by 9.94%, rose to $410.34 on the New York Stock Exchange, up $37.09 from the previous day's close of 373.25. The day saw the stock trade between 386 and 414, with a staggering volume of over 47.6 million shares and a trading value of $19.1 billion. So even after the bell, investor enthusiasm persisted, pushing the price up another 1.25% to 415.48 in after-hours trading. The company's market capitalization ballooned to $461.8 billion, reflecting the market's growing confidence in Micron's future prospects. The catalyst for this bull run, Micron's official confirmation that it has begun mass production and commercial shipment of HBM4, a high bandwidth memory chip critical for artificial intelligence and advanced computing applications. Mark Murphy, Micron's chief financial officer, told industry watchers at the Wolf Research Conference. So, and in quote, we have started mass production and commercial shipment of HBM4 and are very satisfied with its performance. This statement, reported by eDaily, helped dispel lingering concerns that Micron was falling behind rivals like SK Hynix and Samsung Electronics in the fiercely competitive HBM market. So that is it on the shares. Remember, whenever you mention a share, doesn't mean that you go directly and buy it. It means that you can add it to your watch list, do further research, and make an independent opinion and decision for yourself. So on the key highlights as of this morning in the markets, and this is a key focus on the Asian session and what transpired this morning. Just give me a sec. Just wanted to highlight this. Somehow it won't highlight. Perfect. We got it. So, Asian and Europe session prep. The Republican-led U.S. House passed legislation aimed at ending President Donald Trump's tariffs on Canada, signaling a growing anxiety over the White House economic agenda before midterm elections, focused heavily on affordability. Hedge funds are reversing course and ramping up bets on a stronger yen as they buy Japan trade takes hold even after the robust US jobs data capped expectations for Federal Reserve rate cuts this year, according to traders. Japan's super long bonds extended their post-election rally as Prime Minister Sanae Takaichi's historic election win soothed investor concerns about fiscal policy. Federal Reserve Bank of Kansas City President Jeff Schmid said the U.S. central bank should hold rates at a somewhat restrictive level as he expressed continued concerns over inflation that remains too high. Australia's central bank stands ready to raise interest rates further if inflation proves persistent. This is coming in from Governor Michelle Bullock, stressing that the board remains cautious and is yet to decide whether further tightening is warranted. So, other than that, I don't know if there's any other highlights. So, from trading economics, UK GDP grows by 0.1% in Q4. Of course, that was missing the expectations of 0.2%. So, European stocks head for higher open. Investors prepared for a fresh round of corporate earnings, including results from Hermes as well as Siemens. UK house price balance improves in January. Japan producer prices rise the least in 20 months. And US non-farm payrolls top estimates. Trying to see if we may have missed anything. All right. I think we've covered pretty much everything. So today we don't have a lot of news in the markets. So summary here, US stock futures made gains on Thursday morning after the Dow snapped a three-session winning streak as investors adapted to stronger than expected January jobs report. Futures tied to the Dow Jones Industrial Average and SP 500 rose 0.2%, while Nasdaq futures climbed 0.1%. The muted futures action followed a choppy session on Wall Street as all of the major indices ended a little changed. So in after-hours trading, Cisco Systems tumbled nearly 7% after missing profit expectations. McDonald's slipped modestly despite topping earnings estimates. So markets initially climbed following the highly anticipated reveal of the January jobs report. Non-farm payrolls increased by 130K last month, trouncing analysts' forecasts, even as end-of-year reports for 2025 were revised to show a significantly lower pace of job growth last year. However, the strength in hiring at the start of the year complicates expectations for Federal Reserve policy. A resilient labor market paired with sticky inflation could reduce the likelihood of near-term rate cuts, a key driver behind recent equity gains. Attention now turns to Friday's Consumer Price Index report, or CPIA inflation report, the Fed's preferred measure of inflation. A softer reading will build hopes that price pressures are easing even as economic growth remains intact. So the earnings front, Coinbase is expected to be reporting earnings today, as well as Applied Materials. Rivian will also be expected to report their earnings before the end of the week. So Applied Materials is a company that mainly focuses on instruments that are used to manufacture semiconductors, has been one of the top stocks benefiting from the AI growth. So far, yesterday it was up 3.29%. And if you look at the year-to-date performance, the stock is up 26.41% in the last year, or compared to the same date last year, up 87.89%. So just to give you a very quick comparison, if you look at Micron and look at the year-to-date performance, where it's up 30%, in the last year, it's up over 300%. So Micron seems to be moving much faster compared to Applied Materials. However, if you look at the last 5 years, Micron is up 191%, but then that's applied materials up 191%. But then for Micron technology, it's almost the same as the 1 year, which is 366.24%. So at the same time, oil crimes as well as Iranian tensions rise. So oil climbed for a second day as traders focused on tensions between the US and Iran that have overshadowed signs of soaring supplies. So with these tensions rising between the US and Iran, we have seen oil prices being on the rise. But then based on what happened on the US side, that is on the economic calendar yesterday, we had crude oil inventories data coming in the afternoon at 6:30 p.m., where there was a build-up in stock of 8.5 million barrels, which was much higher than the expected draw of 0.2 million barrels, and also much higher than the previous draw of 3.5 million barrels. Basically meaning that oil stocks are increasing, which tends to be negative for price. So later on in the afternoon, that's when we saw oil prices being on the weaker side. So that is all from the fundamental analysis side, trying to understand what are the key things moving the markets. And I think now we can move on and take on some technical analysis. So for those who are new, this is called the MetaTrader 5 trading platform. It's the app that we use for trading on a desktop as well as a laptop computer. If you prefer trading using a smartphone, then you should check out the Equity Trader by FXPesa. I'll be typing the name on the comment section. So you can find it on Google Play as well as App Store. So download, install the app, and then begin your trading journey. All right. So that being said, let's get right into it. Of course, the most favorite, I would say the favorite chart of the day would be gold, which has been pretty much resilient after yesterday's strong momentum, where gold was on a very strong rally, and then during the news made a sharp fall up, and then another sharp fall up, a short fall, then up, and at some point it ended up being on the positive by the end of the day. So then we had the midnight candlestick. I think we discussed about this in the prior session. That was on Tuesday. That gold tends to be volatile around midnight, and this has been happening a lot more lately. So if you're trading one full lot size of gold and you see this kind of movement, so this morning the range between the high and the low in the first 15 minutes of trading was 4,680 points, which basically means that if you are trading a full lot, that would be a movement of $4,680. So that's quite some volatility, and we have been observing that happening over and over again. For instance, you look at the first 30 minutes of yesterday, then you'll notice that that range is also significantly big, 2,886. And if you keep going like that, then you'll notice that there's more momentum happening here around midnight compared to any other price action level. So one day before yesterday, the market had moved by almost 8,819 points, which basically means that you could have made or lost $8,000 just within the first 15 minutes of trading. So clearly, beware of more volatility in gold, especially around the midnight time. And of course, from what we are seeing on the 15 minutes chart, it doesn't seem at all like something is happening. But then when I add this, then it starts making more sense. Meaning that from yesterday's high to this morning's high at midnight, there's this high at midnight, but we are still within the tail. So if you do a trend line here, you'll see that that's the resistance. And of course, on this other side, you can see the support here, and the market is trading in between. So we should be eagerly waiting for a potential break on this side. And if that breaks happen, then that would be a likely opportunity to go for buy trades. So on the longer term, from the 4-hour time frame, clearly gold has been on a recovery path. This began last year, and this week we see more continuation. So the week hasn't been all that volatile, very little to no activity, though we got to retest the previous high, but then more chance that we eventually break out towards the upper side. So that would be very interesting to trade. So silver, on the other hand, is also showing similar signs. So after making a very strong rally yesterday in the morning, it entered this form of consolidation. And so far, the market hasn't broken above or below the two trend lines, which basically means that we expect silver to remain within this pattern. So perhaps we see another sharp drop here. And then once we get a sharp drop, if the market stays within the framework, then we go back towards the upper side. So on the oil side, this is what transpired yesterday. So the OPEC, sorry, not the OPEC, but EIA in the US released the crude oil stocks, and as a result of the build-up in stocks, there was a sharp drop in oil prices. But then we seems to be holding on to some form of support. So nothing much is happening in this chart unless we make it happen. So far for oil prices, this is what we are basically seeing. So clearly a market that is moving down, but then we don't have as much momentum until there's a break. So here we are seeing a sharp drop, which would likely hit this lower trend line, and then from there we would be seeing the market bouncing higher. But the best idea would be to trade on the break. So on US equities, this was the reaction to the NFP, or the US non-farm payrolls. So yesterday, after the announcement of the non-farm payrolls, there was a big jump in the UT 100, breaking both prior highs, that is the Tuesday and Monday highs, and then dropping sharply, wiping some clean liquidity from the markets. Then after doing that, we had the market recover and eventually closing on a green. And today we are seeing more of that kind of momentum, which likely implies that the market is in a range or moving sideways. So the average price action movement from this area here to this area can be described as sideways. So of course, we'll be expecting more impact, especially considering that there has been a mixed performance in the SP 500 equities. So for the UT 100 also, there has been mixed outcomes in terms of earnings. So yes, that may explain why we are in a sideways or a choppy market. So this might not be the best time to sell or buy. Perhaps it's better to wait until the market gets to your entry point. So on the other yen, try to get the yen chart. Sorry, before we even get to the yen, we have the other equity indices. We have the Dow, which made a big move yesterday, but didn't quite get to a new all-time high. Got too close, dropped sharply, and then bounced from there, which now implies that this market is trading in a sideways momentum. So we are currently trading in a range. So this is our range here. So the market hasn't broken the range. So we continue with the bullish momentum. Notice the daily time frame. And if you're looking at the bullish momentum, then that means that the lower trend line here, or the bottom of the range, is the entry opportunity or the value play. So for the SP 500 is the same. We expected the market to rally, get all the way to the prior high. But then from yesterday's price action reaction, there was a strong rally, strong spike down, and then back to formation. So if we ignore yesterday's highs and lows, then we have this. So on this other end, you have this. And at some point, we should be expecting to see some form of break. But since that's not playing out, all we are seeing is more bearish momentum. So after the market got to this area here, notice how it found resistance. And we could be seeing some opportunity coming up. So clearly, this is indicative of a very strong entry by sellers. But then we don't expect that to last for long. Of course, at some point, you expect the market to resume normalcy or bullish momentum. So now looking at other equities, we can start with the Nikkei 25 index, which is also very bullish. So from the H1 time frame, Nikkei 25 index. So we have been on a sideways momentum for a while. The market managed to break earlier in the day. This is the 15-minute chart. And now it seems like we are getting a continuation of the bearish momentum. So from the H1 time frame, this was a very strong rally. But then after getting to the top, all we have been seeing is that some form of sideways momentum. So the market managed to break towards the lower side. So now we should be looking for short selling of positions, and that is on the Nikkei 25 index. So as for the UK 100, here we are looking at the market that just hit a new all-time high just about an hour ago. And after hitting the new all-time high, you can see the sharp drop that immediately entered the market, indicating that we could be headed for much lower prices. And we are already testing the prior high that we had seen on the 4th of February this month. So for the Hang Seng Daily, still a market really struggling to form new highs. So if you go here, then you look at the price action. The Hang Seng Index has been pretty bullish, especially in the month of January. So you'll notice how we managed to swing from here and then move all the way up, gaining by about 9.82%, and then erasing some of those gains in about 3 days. But then with the recent recovery, 3 consecutive greens, then yesterday is more sideways, but then today being more bearish, there's a good chance that we see a continuation of the same. So while it might be looking like really bad, as if this market is about to drop heavily, what we see from a small time frame, for instance, the 15-minute chart, is that this drop could be short-lived, and after we get, let's say, the final drop, the idea is to pick up the pieces and look for bullish positions. So European markets are the most bullish right now as of this morning, with the German DAX looking to break a key level resistance that we had discussed on Tuesday. That is potentially almost broken. We'll be waiting towards the end of the hour, top of the hour, 11:59, to see how the candlestick closes, and if it's higher than this marked region or the Asian session high, then in that case, it might mean that the bull market is weakening. So in this case, let's be looking for opportunities in the direction of the trend. For instance, here after the pullback and continuation, the target should be around 23,507, eventually closing this prior gap that we had seen in the morning. So as for the EU 50 Euro Stocks Index, we're also seeing more bullish momentum. The market also hit a new all-time high, has since cooled off, and cooling off means that the market is taking a step back. So right now we are 6,082 for the EU 50. So we could be seeing some further weakness happening in the stock, given that out of investors are also taking profits. So we also have the French stock market index, or the CAC 40. So from the H1 time frame, you can see that we are just bouncing from, I would call it an upper trend line. So I'm trying to make sure that they fit, but you also remember that there's a personal aspect to, sorry for that. There's a personal aspect to how people go for the trend lines. Some people will go for the tails, others will go for the body. But then all we are seeing here is a market that has been going up, and after hitting the upper trend line, we are seeing some form of rejection playing out on the French 40 CAC 40 index. So just for comparison purposes, notice that this was the prior high. So after the market broke above it, you have seen in immediate sell-off, and we could be seeing some form of reversal playing in. and some of the key levels to watch would most likely be on this particular trend line. So potentially seeing the market moving from there back to this particular trend line here. So for the Swiss stock market index, we are seeing something similar. So even if you don't ask any questions, you just check and see that this was the prior high. Now we are back here. You go to a smaller time frame, then you observe what has been happening here. Then you'll notice that this was basically the prior prevailing trend line. Then on the lower side, we have these 3 points connecting. So now we are looking at a market that is retesting this particular trend line, but could as well drop towards the lower trend line here. So as for the Netherlands stock market index, I believe this is where we have the biggest sell-off, and this just happened in the last couple of minutes. So in about 45 minutes, we've had a very sharp sell-off that erased yesterday's gains as well as Tuesday's gains. So of course, we should be expecting more bearish momentum, given that this is quite a volatile market. So now that we are seeing the market rejecting new highs, so we could have gone for a new all-time high, but the market has completely rejected that in 45 minutes. We have seen the sharp sell-off, so there's still more room for downside potential, with potential targets around 997.47 price level. So that is it for today. Thank you very much, everyone. Thank you for your time, and I hope to see you on the next session. So remember to check out the Bullish Banter event, which is coming up on the 21st of February. So we'll be holding officially our second event of the year. And on this event, we'll be talking about a lot of things happening in the markets. There will be a debate on whether you should be putting your $100 in a prop firm challenge or whether you should deposit in your own account to trade. So that will be pretty interesting. So make sure to sign up and purpose to attend. So for those who haven't seen the ad, yes, sorry, check any video. You'll find the links to register for the event. I don't know if I have the link ready, but I can check and then share it in the comment section. So for those who are new, make sure to subscribe to the channel. These sessions happen every day, Monday to Friday at exactly 11 a.m. Subscribe to the channel, put the notifications on, and at the same time, if you are just learning how to trade, check out the Novice to Pro playlist on the FXPesa YouTube. We have a very nice course that you can go through and learn how to trade. So it's called Novice to Pro by Rufus Kamau. You'll find it on the channel. And for those who wants to understand deeper concepts about the markets, what's happening, and see interviews about other traders and what they are going through, make sure to check out the Bullish Banter podcast on the FXPesa YouTube channel. And for the Novice to Pro course, the link is right here. I'll be adding that in the comment section. So checking on the comment section here to see if there is anything I may have missed or any questions I may not have answered. And good morning, Lucy. I can see Austin in the house. Gideon, Gerard Kimani, Knightley Mokevi, Nomi Wangari, Derry Mask. Thank you guys for joining. Why is there so much difference between UJ, even with over expected figures yesterday? So USD JPY is a pair that is very interesting right now, mainly because there was an election on Sunday in Japan, and during the election, there was a landslide victory by the current Prime Minister, Senator Kaichi, and then the market opened very strong for both the Nikkei and the JPY. And then fast forward to Wednesday, we get the nonfarm payrolls, which at first boost the dollar, but then later on weaken the dollar, which would mean that we have two extremities. On one side, the dollar has been the weakest currency in the year, and the yen is now the strongest currency in the year. So a weak versus strong currency would mean more volatility or heightened volatility. So there's a question from Austin. I cannot access the FXPesa portal. I'm receiving a notification, access denied. The equity trader on my end isn't working either. So kindly reach out to us. Just go to FXPesa.com, reach out to the live chat, and you should be able to get immediate help. And at the same time, you can also email support@fxpesa.com, and then you'll get an instant reply. If you know who your account manager is, you can also call them directly, and they will be able to assist immediately. So good question. So this webinar is not about technical analysis. No, yes, it is. So normally we do the first half, where we cover the most recent news, what is impacting the markets. And once we are done with that, then we jump into technical analysis as you have experienced. And now we know some of the key highlights for the day, with the main expectation being very strong momentum in gold. So we should be expecting to see more momentum happening in gold as of this morning, once we break out of that triangular kind or like pattern. So I saw you are all without socks on GBP can. Mind sharing your thoughts towards short entry. Wait. Kindly pay attention to the details. So on pound card, I believe this is something I did on X earlier this morning. That was a post that I had done in the year 2015. It's not about today. So if you're ever late for these sessions, remember that they are recorded. You can rewatch right after we have ended the session. And this is also rewatchable on Facebook as well as on Twitter. So make sure to review the sessions in case you see it necessary. And last question here I'm seeing was around BTC. So Bitcoin is officially in a bear market, down over 46% from the recent high. And that basically means that if you hadn't begun accumulating some Bitcoin for yourself, then it might make sense to buy during a bear market. You don't want to be buying Bitcoin when it's on a rally, because you might get trapped buying at an all-time high. So here we should be expecting to enter some form of buy zone. So if I zoom out on this chart, you'll notice it's a pretty big drop from the most recent high that we saw in the month of October. So at some point we were down 52%. Right now we are down around 47%. So this means that we have entered some form of buy territory. So if you look at this prior time when Bitcoin was down 32%, went ahead and claimed a new all-time high. So this is kind of cyclical for Bitcoin. So it's something that happens over and over. So the last time we were in a bear market, a proper bear market, this was in the year 2021. The price of Bitcoin went from around $69,000 all the way down to $15,000, which was a 77% drop. But then immediately after that, the market started going up. So now that we are looking at a 46% drop, it's time to begin thinking of DCA, dollar cost averaging, buying small amounts regularly, not trying to catch the bottom, but trying to average in, so that when the market reverses and starts going up, you'll be able to benefit and be proud about yourself and say, I bought the dip and now I'm reaping the rewards. So that is it. Enjoy the rest of your day, and I hope to see you on the next session. Thank you guys for engaging in the comment section. Thank you for liking and sharing the live video. Also for those who have retweeted the live video, thank you. I appreciate you all.